Well, for more on this, I'm joined by Ben Picton, Senior Market Strategist at Rabobank. Ben, thanks for your time. Look, how did you interpret the numbers today? Just how soft was that economic growth in the first quarter?
Yeah, g'day, Ed. I think it's pretty fair to say that it was a fairly shabby number. We would have liked to have seen a higher growth figure for the quarter. Our own projections were for 0.3%, so we expected a higher number. And that was after we revised our forecast down after some weak GDP partials that came out yesterday. So it was a soft number. Perhaps it's maybe exaggerated a little bit by some of those weather effects with Cyclone Alfred that happened during the quarter. But overall, we'd certainly like to see a more robust growth figure.
Yeah, you heard Ted O'Brien there talking about the household savings ratio going up and Aussies basically holding on to some of the money they might have got from the RBA cutting rates earlier this year. I mean, how important is that household consumption, consumer spending number for overall economic growth?
Yeah, it's hugely important. Household consumption is a massive part of the Australian economy. So the economy does struggle to grow when households aren't confident to get out there and spend some money. Now, we did see the savings ratio lift to 5.2%. Interesting thing about that, I think, is that that was actually higher than what the RBA was forecasting in their recent statement on monetary policy. They had a figure of 4.4%. Penciled in. So we're seeing that consumers are maybe more cautious than expected. So I think if we're looking down the track, the big indicator to watch is probably going to be the consumer confidence figures, because that's going to be the key to unlocking some of these buffers that households are beginning to build up. We're starting to see income growth. We're starting to see growth in disposable household income. But that's not translating into spending just yet. So we need a little bit more confidence from households, and maybe a couple of RBA rate cuts might help that along.
Yeah, how do you think the Reserve Bank will interpret today's numbers? I know the next board meetings is the decision's on the 8th of July, so just next month. Do you think they could be cutting rates back to back? They cut last month, could they cut again next month?
Yeah, we think so. So it's no doubt about it, you can't polish this one. It was a poor growth figure. And I think the RBA will look at that, and they'll be thinking that they've maybe got their sums wrong a little bit on what their expectations for the resilience of the household sector was. With the pullback in government spending in this quarter, there was maybe the safety net was removed a little bit for the economy. So that maybe does put the onus back on them to some degree to start to ease monetary policy a little bit more aggressively. We've got a cut penciled in for July. We're also expecting a cut in August, so more easing on the way, we think.
Yeah, and just explain, you mentioned public spending there, just explain how important that's been for keeping GDP growth ticking over the past few years.
Yeah, it's been incredibly important. So we have been in this situation where the private sector has been in retreat to a large degree, and government has sort of taken a counter-cyclical approach, a Keynesian approach, economists would call it. When the private sector is in retreat, the government steps forward and keeps the economy ticking over. We had seen government consumption figures in previous quarters a little bit more robust, and part of that was because of the electricity rebates that were put in place. Now, in the first quarter of this year, we saw some of those rebates removed, so that shifted that spending on electricity out of the government column and back into the household column. But even with that shift, spending from households was still weaker than what it was, or spending growth was still weaker than what it was in Q4. So a soft figure, and yeah, without that government safety net there to prop up the GDP figures, we ended up with a low number.
And obviously the other big problem is productivity. It was down minus 1% over the course of the 12-month period. And we've heard Governor Bullock talking about it as well. We've heard about the federal government talking about it. I mean, how big an issue is this low level of productivity for our economy?
Yeah, productivity is a problem, and it's been a problem for quite a long time. So effectively, when we're talking about productivity, we're talking about the speed limit of the economy. How quickly is the supply side of the economy growing? So productivity is one of the major factors, not the only factor, but one of the major factors that affects the supply side of the economy. And if supply is growing more slowly, it means that we can't grow the demand side of the economy as quickly without generating inflation. So we would like to see more productivity growth. Jim Chalmers has said that in this new parliament, productivity is going to be a focus for the government. Yeah. I think that's very welcome. But maybe just to call one thing out, we did see a bit of a drop in unit labour costs in these figures today, and that is a positive thing from the perspective of the government and the RBA.
Ben, Picton, thanks so much for your time. Appreciate it.